Welcome everybody to the first session of this administration's subcommittee, investment subcommittee. We've got 3 new members. There's only me and Councillor Gifford left from the old guard, but I think we've got some very good new recruits. One of the things about this subcommittee is that we do handle what for us is a significant sum of money, which is about 2.6 billion pounds of investments. And we're helped greatly by our advisors, but if we get it wrong, we potentially could have devastating effect on the council's finances, because one of the things that the local government has to do is pay pensions. And so it's quite a serious, if you like, duty that we have to discharge. So it's a very important committee, and one I'm pleased because it's a good committee to be on that isn't given great profile in the council. But it's a lot of very good, very hard work. You'll also notice that we do get a lot of papers to look at, and very dense papers. So we do rely on advisors to help us, and hopefully you've all had a chance to scan them. But welcome, and also to the officers for all the work during COVID, our advisors, and to welcome Bob Swarup, who's the first time I've seen him in the flesh. He was appointed independent advisor last spring, last January, wasn't it?
This January.
This January, yeah. Okay. Right, so if I move into the agenda. First of all, no apologies. Does anybody have pecuniary or non-pecuniary interests, apart from being members of the pension fund? No? Minutes of the previous meeting. I shall be looking at Councillor Gifford for guidance on this matter, because I think you're the only one that was here. Do you have any comments about the minutes? It's fine, okay. So thank you for the accuracy of the minutes. Good. We now have to review the minutes of the local pension board, which I think we take as read, don't we? Isn't that right? Yeah. I'm not sure how much training new members got on the role of the pension board and the investment subcommittee and the staff and pensions committee. But the pension board is an independent body that was set up under government revision of pensions due to Maxwell, I think. And it basically, its job is to monitor and semi-audit, sort of unofficially audit what goes on, mainly on the administration side. They don't have a lot to say to us, although we do joint training with them. But hopefully everybody's managed to look at those minutes and just note them. Happy to note them? Good, thank you. We now move on to forward plan. Neil, are you down to speak?
Thank you very much. Good morning, everybody. My name is Neil Buxton, technical specialist to the pension fund for my sins. This is the forward plan for the pension fund subcommittee. What this does is set out the items that the subcommittee will review at each meeting over the coming 12 months. It's not set in stone, and we welcome suggestions if members would like anything particularly included. You'll see that in Appendix 1, we have what we call the standard items, like the forward plan, risk monitoring, investment fund performance, etc. Then on to specific items for presentations, policy reviews, which we'll bring to the subcommittee. This time, for the first time, we've also included policy reviews that will go to the Staff and Pensions Committee as well. And we've set out proposals for training going forward as well. Happy to take any questions.
Councillor Gifford?
Yes, just briefly. You've got down the training plan as being on the forward plan for December 2021. I was wondering whether the training plan wouldn't be better done slightly earlier at the September meeting. Just a thought.
Would there be a problem for that, or could we bring it forward?
Yeah, we can certainly take that forward as a suggestion, yeah, and bring that forward. Yeah, I think it's a good idea.
Very good. I suspect it's almost done now, isn't it?
It's not fully formed yet, but we have put in the July meeting, the 15th
Yeah.
July risk appetite meeting, which hopefully councillors have received an invitation for. That'll have Bob Swarup presenting, as well as our risk officer for the County Council, Lynn Todman. That we'll pick up on that in the risk meeting part of this. And also we've got some August meetings that we're scheduling in. So we are in the process of putting the plan into place, so it will be ready for the September meeting.
I mean, you'll see that we've got training set out further down on the appendix, much of which came out of what we did from the National Knowledge Assessment. So, yeah, we can certainly formalise a plan for September.
Good. Okay, so we're in for September and take it from there.
Okay, thank you.
Excellent. Well done.
Thanks.
Good. Okay.
Thank you.
Risk monitoring. There's a report by Chris.
So, can I just check, can people hear me okay? So this is the first risk monitoring report under the new risk monitoring arrangements which we changed at the last committee meeting. The focus is on high-level strategic risks and actions to mitigate risks. We have had a look at the scores, and there has been officer activity looking at making some amendments there. So in the report you can see a high-level description of where we've adjusted some of the scores. This is a positive, and it's an indication of risk having a higher profile and getting more explicit attention by officers. But the key thing to say about scores is they're a means to an end, and the most important thing is that we've broadly captured the key strategic risks and that we've got actions tagged against each of those risks to make sure we manage them appropriately. We have a business plan which is separate to the risk register, and at the previous committee meeting, for those of you who were there, you may recall, explained that we want to have a single action plan for the pension fund. So where there are any actions or mitigating actions associated with risks, rather than having a risk action plan and then a business action plan and various other action plans, we just made sure that they've all got a home somewhere in the business plan, which they do. We've split the previously single line for COVID risks into two lines, so one for an investment focus and one for other COVID-related issues. But you'll notice that COVID still pops up here and there in some of the other lines, as you might expect. We did plan to run a risk workshop a month or so ago, but in the end we couldn't make that really work with the elections. So as you've heard, we've got a workshop planned in July to pick up looking at risk appetite again. And you'll see we've made a few updates to an indicative risk appetite statement, but we won't have a definitive one until the committee's had the opportunity to talk it around and take a view on what you see fit about risks. Later on in this agenda, there'll be an item on updating our investment strategy, and thinking about risk and updating our thoughts about that will be one of the components of informing that review of investment strategy. That's all I had to say by way of introduction. Happy to take any comments or questions.
So, any questions? Sarah, any questions? Chris? No? Not yet. All right. Yes. Joe.
Thank you. What's our expectation with this? Because I know when you have risk registers, you will always have things that are going to be red, regardless what measures you try and put in place. Some that you can take green, some that will move over time. I'm just trying to get a sense of, when I was looking through this, what our expectation is with this going forward. Is it something that we think, yes, we're going to try and get those from red to green, or is it just going to be more a monitoring, or how active is the interventions going to be on these?
That's a timely question, and the answer to that is going to change from if you look back and you look forward. So at the moment, when we think about risk, you've got risks, and the general idea per se is you try to minimise them. But the issue with risk is that there are certain risks where it's necessary to take more of a risk in order to achieve a certain objective. So where we have the discussions in July about risk appetite, the committee will be invited to think about what's our appetite for certain risks, having regard to the fact that different risks are rewarded in different ways and serve different objectives. So for example, if it comes to our appetite for risk when it comes to investment, that might be relatively high because if you don't take a certain degree of risk, you won't get a reward for investment. If you looked at our appetite for risk when it comes to do we pay people accurately and on time who are pensioners, our appetite for risk is probably going to be low because you just don't want to make mistakes in that area. So what will change is when we have a risk appetite, it won't just be anything that's a high risk, we will try and get it lower. We'll have target risks. And actually, if your risk is too low for something, that's as bad because you're missing out on accessing opportunities. So that whole risk appetite discussion will change the answer to that question, hopefully for the better.
Thank you.
Good. Councillor Clifford?
Oh, sorry. Yeah. Councillor Kettle first.
Thank you, Mr. Chairman. What would be helpful to my understanding as a newbie on this is to understand the direction of travel, and also, and the second part is a serious challenge because I'm not quite sure what the answer is myself, but is the scale. Because a 1 or 2% mismatch in one of these tests may result in additional liabilities or a shortfall in assets of a couple 100,000, a couple of million, big figures I accept, but not fundamental to the whole scheme. If that 1 or 2% mismatch was actually to be catastrophic, then that would be very helpful. So which way are we going? And the impact is, some of these is red, which is obviously something we need to focus on. But what is the quantum we're talking about?
Yeah. So there's a couple of things I can explain in terms of that now, and then there's a few things that we'll be talking about in coming months that will hopefully address that. So later on in this committee meeting, there'll be the reports where we look at the monitoring information. And so that sets out a little bit about the profile of investments. And then from there, we can talk about the different risks of the different asset allocations that we have. So, like the high risk equities and low risk bonds and so on.
So, have you got a microphone?
Yes. Sorry, can you hear me okay?
I can, all right, but you're struggling.
Just not quite as clear as these
Sorry.
two microphones.
Is that any better?
Give it a go.
Okay. So that item will tell us a bit more about the specifics of scale and how much money we've got in different assets and risks associated with them. The work that we'll do on looking at the investment strategy review will also have regard to risk, and we can be specific about that there. If you look at the risk register before COVID, just to illustrate by example, we didn't have a line in the risk register saying there might be a COVID pandemic, and we didn't have a line saying there might be a pandemic. However, when COVID hit and we experienced the impact on the markets and our investments, the impact was within the population of scenarios which the actuaries modelled when we were looking at our strategy previously. So there's no guarantees about being able to deal with everything that could possibly happen. But those are some of the things that we do to try and be specific. So in this particular meeting where we look at the monitoring report, we can run through those different investment allocations or buckets and talk about the relative risk of them. Sorry, does that answer the question, or have I missed your point?
Thank you.
I think that we take expert advice from our actuaries, both the investment consultants and the scheme actuary. That's where we also get quite a lot of comfort, because that's the nature of their role, is to make sure that those quantums are within, as Chris mentioned, acceptable scenarios.
Good. Happy. Yeah, Councillor Gifford, any comments? Bill, any comments?
Just to say that I was pleased to see that cyber security was being taken very seriously, because as Councillor Kettle was pointing out, you can have a risk that is going to have a major effect, and that's one that wouldn't be just a 1 or 2%, it would be one that had a major effect. If it all goes well, no effect at all.
Thanks. So when I look at these sort of lists of risks and things, I always think of a comment I once heard that you can never make a list of what you haven't thought about. Your comment about COVID was, or any pandemic was in that. We did have pandemics. We had a nasty pandemic in the 50s, the Asian flu pandemic. Nobody talks about anymore. You know, there was a 1950s pandemic. Everyone talks about the Spanish flu, which was 1920, but not the more recent Asian flu, which actually affected the generation fractionally older than us. One of the things about the risk register is that we do have, the pension administration has responsibility for investments and paying pensions. And we've got here the various risks are sort of mixed up. And it might be a good idea to separate them out, because we're the Pension Fund Investment Subcommittee. Yet we don't have responsibility for managing the process of paying pensions.
Yeah, so this is an all-encompassing kind of single strategic risk register for the whole fund. We also report this to the local pension board, and yes, it encompasses what you might call the three pillars of how we run things. There's the investment and funding side of it, there's the governance side of things, and the administration side of things, and this does cover all of those. But the idea was, having looked at it last year, we had two risk registers. One was COVID specific and one was everything else. And that was fine for a time. But once you get to the point where we felt like we had a handle on the COVID things, we thought it would be more strategically straightforward to go back to a single register. So this does cover all the bases. We could potentially look at trying to compartmentalise it more. But I personally would recommend that we do keep everything in one place, so that wherever we're going, there's one register that covers all of the fund's business.
I think that's absolutely correct, having one register, just making sure we know what's our responsibility. Because the problem about risk is if you can't actually have any influence on it, there's not a lot you can do. And I always think that having a mitigation line, which probably is something that Councillor Simpson-Vince was talking about to a certain extent, was the further risk controls, or the risk controls, are probably more mitigation. And it's the mitigation that's critical. Because if you could mitigate, for example, COVID administration, it went really well. We mitigated that extremely well. The systems kicked in. And actually, yes, it was a risk, but the mitigation activities we had lined up, or created instantaneously, I'm not sure which, actually meant that it became a very, very minimal risk to the actual delivery of pensions. Of course, the problem with the investments is, apart from hedging, there's not a lot we could have done. Luckily it bounced back. So we'll see. Anyway, so any other comments from any of the councillors? Sarah, no? No? Bob, did you want to say anything?
I just wanted to make a quick comment on the question around risk appetite and I think the risk register more generally. One of the sessions, certainly in the July meeting, will actually be looking at kind of how to look at risk management in a strategic sense from the point of view of the committee members, in order to allow them to actually bring that scrutiny to the table so that they can actually ask, I think, the right questions and think about what all the advisors and all the various people in the room are trying to bring together. I think that will be quite helpful as well, because I think one of the challenges always with risk registers is very much thinking about the relative importances of all these risks and trying to narrow them down to what are the two or three that should be focused on. So hopefully that session will help, and certainly if anybody does have any questions in the interim, then I'm more than happy to pick up on those separately as well.
Thank you. It's occurred to me, I hope we haven't actually introduced Philip Pearson, who's our new investment advisor from Hymans. Seen you a lot on Zoom, but that's about it. Do you have any comments, or Richard, if you pair of you work in tandem on that? Any comments?
Not from me.
No. Richard, any comments?
Nothing particular other than just to note there's a valuation next year, so that will be a great opportunity to look at those risks in the full, and particular focus on the ones from an actuarial perspective that are quite sensitive. So things like inflation, longevity, investment risk is obviously a big one as well. And I'm glad to see cyber risk there, because that's something we've been focusing on as a firm. It's a really big one. And so there's these kind of operational risks as well that you need to bear in mind. So there's investment actuarial stuff, but there's also the operational things as well.
Good. Thanks very much. If there's no more comments, we just note this, don't we? I think. Yeah, we note and comment, which we have done, and we also look at the risk statement, which we're going to be trained on later. Okay, policies. Sorry? Yep. Councillor Kettle.
2 points. One, Brexit. We talked about COVID being completely unpredictable, and it wasn't presumed on the papers at some time 12 months ago. But what about Brexit? Is that the ongoing impact of that? Is that a risk that we should be considering? Or is that now past, done and dusted, and we're sailing in clear waters, as you might say?
Well, it's a relatively low risk given our UK equity exposure, and that our UK equity exposure has quite a lot of the cash flows coming from overseas. So we actually don't have a particularly large exposure to UK equities particularly. I'll pass over to our investment consultant, Philip Pearson, if he'd like to say a few more words about Brexit risk on our investment portfolio.
Well, I was thinking more of the commercial risk rather than the actually overseas investment strategy side of it.
So that is in our UK equity funds. So Philip, if you would like to say a few words about the UK equity funds and how they're constituted, that might be helpful.
Thank you. So the UK equity allocation is indeed where one might expect Brexit risks to crystallise more quickly. The fund is somewhat overweight UK equity relative to global markets. That is largely a function both of obviously the domicile of the fund and also history. Over the years, the allocation to UK equity has been reduced, and that is a process that we would expect to continue. And indeed, there are envisaged in the last strategy review. There was a further reduction in UK equity planned as part of some of the new investments that are being made through Border to Coast. Clearly, those changes are somewhat conditional on the outcome of the strategy review that is kicking off this year, leading into next year's valuation. And that will be the opportunity to reconsider how much risk there is in the fund's UK equity allocation, and trade that off against risks in other alternative asset classes.
Does that sort of ask the question about commercials?
Thank you. But in terms of the commercial risk to the UK economy, has that already been factored in to the price of equities, and therefore that risk has effectively been dissipated in terms of the capital value?
Yes, it's, we believe it has, actually, based on what is known so far. So clearly, if other pieces of information come to light, such as, very topical given the discussions over the weekend, a really unpleasant, serious trade war with the European Union, then that may well lead to further reductions in UK equity values. But our view is that what is known about the Brexit risk is already reflected in asset prices. And in turn, those are reflected in the long-term returns that we expect from UK equities, which we review once a quarter, and will do again, therefore, at least 2 or 3 times before the new strategy is approved next year. And you know, evidence for that is, as people may know, the UK equity market has underperformed quite significantly relative to other regional equity markets over the last 2 or 3 years. A variety of reasons for that, but Brexit is generally considered to be one of those reasons.
Another line item that might be worth mentioning is that our UK Equity Alpha Fund run by Border to Coast is an alpha generating fund, meaning that it's meant to be based on skill. So the managers are making their own selections of which companies we invest in, rather than it being a passively managed fund, which would mean that you'd just be invested in line with the weighting of value across the market.
The second one is in relation to the COVID risk. And Victoria and she gave me a briefing session on Friday. But COVID has 2 impacts. Well, it has many impacts. It's a multifaceted problem, clearly. But in terms of the pension liabilities, you know, the tragedy of the 130,000 deaths is something which is appalling, but we are where we are. But of course there is a knock-on effect which is being discussed as opposed to its impact on general longevity due to the impact on other conditions people might have. Is that something that has, I mean, how have you sort of factored in that issue? Because it's potentially reducing liability, because if your longevity reduces, then the liability of the pension fund reduces. Is that something that has been factored in at all? How our actuary is dealing with that?
Yeah, I think just a quick one. I think we might be straying into sort of what we're tending to do with the strategy review, because, and unless Richard wants to make a comment, or I think you know, the answer is yes, that's marked, and the industry is aware of it, and there's an active debate at the moment.
Okay, Tom.
So I think we move on. Bob, you got any final comments? Or? Okay, then Richard, you come after.
And just on longevity, yeah, there was 2. I think you've kind of pointed out both. So there's an immediate death rates have increased over the last year or so. We're looking at that. We're gathering a lot of data, as you might imagine. We've been gathering over the last year and a half. I gut feel is that Warwickshire Pension Fund, for most LGPS funds, the impact's perhaps not as big as you think it might be, because you know it's not the primary source of death still in the UK. There's lots of other things causing death still, flus and other things. Probably less than 0.5% of an impact on the liabilities in terms of deaths over the last year. The bigger question might be what the longer term impact is, and on other things like cancer treatments and the other conditions that are still out there and perhaps haven't had the focus from the NHS, have been battling COVID. And so part of the evaluation planning and modelling will be doing some scenarios around that and testing what the scenarios look like to get a feel for that risk in the longer term, because longevity is a long-term issue as well as just a short-term thing. It's trying to work out what impact things like long COVID and the lack of treatments elsewhere might have in the pension fund going forward. That'll be part and parcel of that 2022 valuation, which is rapidly coming up, 31st of March next year.
Good, thanks. Bob?
Yeah, just one final comment from my side, which is I think, John, to your point about this coming into the investment strategy review, I think both with Brexit, COVID, and there'll be other factors that will happen over the next year or two. There'll be many things that come into it. So Brexit, for example, we've had one set of impacts already, but you may have currency risk going forward. if there is a trade war between the EU and the UK, or if the dollar starts to strengthen. So I think, to my mind, there will be a much broader discussion of these things, and in a sense, I would expect that everyone will want to get much more into these risks over the next few months, because that's what will be required to ultimately update the asset allocation. I think the key thing to, in the context of longevity and other areas to bear in mind, is that fundamentally, ultimately, it's the interplay between the investment risk and the asset portfolio and the contributions at risk that effectively come into the scheme, which are linked to longevity and things like that. And it's that interplay, ultimately, that the committee is trying to balance.
Thanks. If we're happy, we'll move on to voting policy. Thanks very much, Chris, for your interventions.
Thank you. So the voting policy is created for Warwickshire Pension Fund. It's been in place for several years. The main change from previous years is that we no longer have any segregated portfolios. By that I mean that all of our funds are now indirectly managed. So there's either Border to Coast or Legal and General Investment Management will then run a fund underneath them where we have a portion of that fund rather than having the entirety of that fund. Otherwise, the policy remains as it was last year. Key things to think about in this policy are that we align it with Border to Coast Pensions Partnership. Border to Coast Pensions Partnership is the pool that Warwickshire Pension Fund is part of. Pooling was introduced in about 2016, and there are 8 pools nationally. The pool that we're in, we're one of 11 partner funds, so that means that we are a shareholder 1/11th, and we get to decide which funds should exist and have some influence as to how they are set up. This then relates to the voting policy, because Border to Coast will vote the underlying shares at AGMs in line with what they believe is an appropriate manner for Border to Coast Pensions Partnership. So that means that it is one step removed from Warwickshire Pension Fund. This is the reason why we have also appended the Border to Coast Pensions Partnership voting policy, so you can see how they relate to each other. The third one to which there was a link was Legal and General Investment Management's investment policy. However, we have very little influence over this given the size of Legal and General. Does anyone have any questions or comments?
Anything from Hymans at all? No? Bob, got any comments? No? Go for Councillor Gifford, yes.
Yes, I felt the Border to the Coast voting policy seems like it's possibly slightly stronger than the Warwickshire one. And it's certainly something, it's one of those items where we're likely as members of the committee to get questions from the public who want to make sure that we're not voting to overly remunerate directors who haven't really achieved a great deal. At the same time, they are wanting to make sure that we are taking account of the of climate change and so on. I noticed recently that Exxon, the shareholders voted off three directors who they felt hadn't shown any real interest in changing Exxon's carbon move towards a more non-carbon future. So it was an interesting example of using the voting to show engagement. I was quite surprised and quite pleased to see that, and it was I'm not suggesting that we quickly start buying shares in Exxon, but it seemed to me to be a good example of how because they were some of the very largest asset managers in the world who were ones holding trillions of dollars worth of assets, were using that power to show the management that they couldn't just be walked over. Thank you.
Thank you. Thanks very much. Councillor Simpson-Ince, any comment? No? Councillor Kettle? Councillor Miller, this is your area, isn't it?
Perhaps the next one. Responsible investment. Nothing.
Yeah, sorry. You have no comments? No, I thought thinking you probably wanted to say something. Oh, your responsible investments, yes. Right, so no further comments. We note and comment. So we've done that. That's very efficiently done. Well done, Victoria. General activity update now, I think.
I think the responsible investment policy
Is that?
and
Oh,
the
right.
climate risk policy that's part of that.
Yes, I thought that was all part of the
So
parcel of the same
on
document.
page 61, which they're very similar, so the three policies are quite similar. So the responsible investment policy, which there's a request for the committee to comment on and approve,
Yes.
is where we set out how Warwickshire Pension Fund relates to investments in terms of its fiduciary duty as a steward of the members' benefits. So here we have again kept the policy very similar to how it was last year. There are no material changes. There's also the climate risk policy, which similarly remains very similar to last year with no material changes. However, these are two policies which we believe may be altered in line with the investment subcommittee's ongoing development of beliefs and intentions for the pension fund. Are there any questions or
Yeah.
comments?
Anything from Highlands or anybody? Yep.
I would very much echo Victoria's suggestion that these are policies that will need to be carefully reviewed and potentially changed during the current during the strategy review still to come. One of the areas that we will need to look at in the strategy review is whether or not the fund should adopt any goals on climate change and the management of the associated risks. Many funds are doing so. If that happens, then I think it's very likely that there will need to be some changes, particularly to the climate risk policy document here. So I would recommend we consider this as a work in progress at this stage.
Good. Thanks very much. Bob, any comments?
I think echo what people have said, but I think the one thing to also remember is that the policies will also contain new areas over time. I mean, a very good example is if you look at climate change, the new area where there's similar work going on is biodiversity, for example, where there is now the task force for nature-related financial disclosures, which will become mandatory in a few years. So I think one of the important things to remember with these policies is that they're what I would call living documents, and it's not perhaps just for the strategy review, it's actually more of an iterative piece of work that carries on over time. And one of the important things, particularly the country to judge, will be actually what is their definition of responsible investment and what do they feel about these different areas, because I think to please everyone is going to be impossible as well. It's going to be very important to decide, what do they feel about climate risk versus biodiversity versus, say, inequality or affordable housing, or there are many different variations of this. So thinking about that, I think, will be important as people go through their deliberations in the strategy review and beyond.
Good, thanks very much. Councillor Miller, any comments?
Thank you, and thank you, Bob. Very pertinent to raise the nature-based risk. That's only just beginning, and we know that the TCFD took quite a few years to get off the ground. I'm not sure how much excitement and appetite there is. I'm sure it will get going, and I'm sure folks will get enthusiastic about it, but I think we're a few years away from the nature-based work that TCFD is definitely starting to bite. the UK, you know, is making a lot of it mandatory. I'm sure it will be the first country of many. And like you say, this isn't just a one-off process. This is very iterative, and it will evolve over time. And there'll be lots of different calls on our attention to focus on these different ESG policies. But I think the approach so far seems very sensible.
Thanks very much for those comments. Did you manage to do that? Okay. Good. Any comments, Councillor Kettle? No? Councillor Simpson-Ince? Sorry? No, you didn't. No. You were saying no. Any comments?
Thank you. Yeah, I think the climate risk policy is one that we're going to be looking at on a regular basis, and I don't think we necessarily know, you know, ultimately our job is to protect the pension fund, and it's to stop a rush into necessarily looking at the climate targets, and it's that balance between climate targets and reward. And so I think that's going to be one that's evolving over time. And we might have to be very proactive in how we respond to it. And it's kind of keeping up with whatever the latest trend is almost. It's like you can suddenly find something within all the climate emergency work that becomes a focus out in the wide world, and then it sort of ends up sat on an agenda in a meeting like this, and you've got to look at it, and it's stopping that knee-jerk reaction to things and stopping being proactive but not being short-term on it, and looking at the longer-term issues with it and thinking, is this something we want to look at? Is it too much of a risk? And everything all then ties in together simply with this one policy almost. So I think it's one of those we've got to tread really carefully with this one, but it does need to be, I think by its very nature, it's going to come back probably pretty much at every meeting to look at, saying, you know, do we need to change anything? Do we need to look at it again? So yeah, I think this one's going to keep us quite busy.
Good, thanks very much. Councillor Gifford? Comments? No, fine. Okay, now, we've all commented. We're asked to, with the caveat that we should be looking at this again with part of the strategy review, is the committee happy to approve both the responsible investment strategy and the climate policy? If those against? Anybody against? No? Abstentions? No? Favour? Please put your hands up. Thank you very much. Right, that looks okay. Okay. Voting policy. What have we done there? Oh, I see. The voting policy. Yes, we must also, apologies, I missed the voting policy. I'd read that as simply a note. But, yes, we have to approve both the pension fund stewardship voting policy and the approve the Border to Coast Pensions Partnership voting policy, which actually I think was approved last year, wasn't it? Yeah. So I'm not
There
sure
were some
about
alterations made, so there have been some strengthening in areas.
that. Okay, so stepping back to agenda item 5, could you please approve the pension fund stewardship and voting policy? Thank you very much. And approve the Borders to Coast Pensions Partnership corporate governance and voting guidelines. Thank you very much. Have we passed muster? Good. Right, thanks very much. Is the general activity update?
Yes,
Good.
it is. So this report sets out how the pension fund has been managed over the previous quarter, and it sets out high-level information, noting that this is still the public part of the session. So one thing to bring up at the start is that the funding position is good. The net contributions and benefits equal out, so that means that we are in a cash flow neutral position. The upside of this is that we're not having to sell any assets in order to meet our benefit obligations. As you can note in the graph, we've seen strong investment returns of just under 3% over just the last quarter. The fund continues to increase in membership and also in assets. That has been a continual movement over the past 20-ish years. The long-term performance of each of our underlying funds continues to be broadly in line with expectations of their objectives in terms of the benchmark that they relate to, but sometimes not in terms of the target, which is where they aim for a benchmark plus an additional, say, 2%. But this will be covered further in the investment consultant's quarterly report. The alternatives part of the portfolio continues to be deployed. However, deployment is relatively steady. This means that it takes time for the managers to whom we commit funds to ask for the money from us to put it to work. Again, alternatives reporting is something that will be picked up in further detail in our investment consultant's quarterly report. The cash balance continues to be relatively high. This is partly due to COVID, so we have decided to hold assets as cash rather than necessarily invest them. Again, this means that we continue to be in a strong position for paying benefits as they fall due. We have also considered holding some of this cash into the PIMCO DIF, the PIMCO Diversified Income Fund, as an interim measure to going into the Multi-Asset Credit Fund. So that is in section 4.5, where you can see there's the additional source to be confirmed item, of which cash is likely to be part of that. In voting, this is an item to make sure that the investment subcommittee see broadly how the fund shares have been voted, or how shares have been voted on behalf of the fund. Again, this is through pooled managers, so we haven't had a direct influence on how they are voted. Worthy of note, potentially, is that the Border Coast equity funds have broadly voted for at AGMs, whereas the legal and general investment management funds have had a much higher against, withhold or abstain. This is a way of indicating that those managers do have slightly different voting policies around stewardship and engagement at two. The independent financial advisor that we selected at the end of last year is with us, Bob Swarup. However, there were two lots that we put together, and the second lot, which is a liabilities focused lot, is going out for tender hopefully towards the third quarter this year, but is not currently in place, so we have a vacancy. The UK Stewardship Code, currently we are signed up to the 2012 version of the Stewardship Code. There is a 2020 version that has been released, and we intend to bring a document to the September meeting which aligns with the Stewardship Code 2020. This will also sit within our annual report, and we hope that you'll appreciate the way that the principles have been interlaced with the annual report to show that we are governed and managed in a way that meets the Stewardship Code's requirements. This is a comply or explain policy, and there are going to be areas where we will be choosing to explain rather than comply, at least this year, with the hope to make potential improvements in the years to come. Climate change is something that we've mentioned already, so I won't delve too much further onto that now. But we do intend to have investments in line with the Task Force on Climate-Related Financial Disclosures in 2022. So that's a task for a year to come rather than for this year. Training, as Neil Buxton mentioned, is being put in place for both new members and for the committee as a whole. If anyone has any items that they would like to receive training on, please do let us know, and we will try to tailor the training plan in line with that, as well as giving the individuals chances to have specific training where they would like this. Possibly worth mentioning that there are many conferences and webinars, as well as officers willing to give training directly. We are going to be keeping training logs for the local pension board, and these will also be available for committee members to keep a log of where you have received training, as this is probably going to be in line with best practice. On which note, the Scheme Advisory Board has released a good governance review, and that is something that we will look to next year when it is finalised. On the 29th of April, we undertook an employer engagement day. This was primarily related to the administration of the fund. We also took this opportunity to have over 50 employers together to ask for their views on investments and on responsible investment as well as on how the scheme is funded in relation to its contribution rates. There are further details of the polls in Appendix 3. Does anyone have any comments or questions about this report?
How many employers do you have in total?
Just over 200.
200?
Yeah. It's an open scheme, so that means that we are continuing to receive new requests for employers to join this. There are also some that leave, but at the moment we're net up on terms of employers and therefore employees and members.
Warwickshire accounts for about 50%?
Somewhere around that.
Yeah, and
The county council is just over 50%, and there are the 5 district councils that also make up a significant proportion of the liability value.
Good, thanks for that. And did they turn up to the meeting?
We're not aware of which employers did attend the meeting, which is one reason why these polls are potentially not as useful as they could be, but they do provide some background. Also worth mentioning, although there are over 50 in attendance, only 10, and in one case 11, decided to respond to the polls.
Just say quickly, I assume Warwickshire didn't appear.
I would have to ask another colleague in Warwickshire County Council that question.
Chris, you have a comment?
Just to comment on employers, so a key feature of the fund is that there's a small number of very big employers and there's a large tail end of smaller employers. If you go back a number of years, I think there was about 65 employers, and it's grown. If you look in some of the recent presentations we've done and in the business plan, you can see that it's gone from about 65 to 200, and it's things like academisation, staff and services spinning off in companies as contractors and that kind of a thing.
Good. Thanks very much. Any questions for Victoria? No? Okay, well done. So we're just expected, I think, to note and comment on this. Any comments? No? Well done. Obviously, it was a very comprehensive and understandable report. Congratulations. Okay, we now move on to funding strategy statement, where again we note and comment on the report. Is this you, Victoria?
Neil Buxton, our technical specialist, is taking this one.
Thank you. Thank you, Chair. Just for the benefit of the new members, briefly explain what the funding strategy statement is. This is a summary of the fund's approach to funding its liabilities. So, for example, the members, the employees who are members of the pension scheme, their contributions are set by regulations, although they are reviewed from time to time by governments. So this is how the employers, our approach to how employers will pay their contributions to balance the scales, as it were. It's a document that we keep under constant review, and we will update when there are changes in legislation. And again, for the benefit of the new members, there were some changes in legislation going back a little time, and we've been updating the funding strategy statement to reflect those. And this is about how an employer can apply to have their contribution rate reviewed, and in what circumstances we will possibly do that, but also importantly, when employers exit the fund, how we can deal with them regarding the payment of any cessation debt, or if there's a credit payment due to them as well. This is set out in Appendix 1. Happy to take any questions. Oh, one thing, hot press, stop press news. There was a court case that we received information about last week, where a funding strategy statement approach to an exiting employer was challenged in the courts. The pension fund was found to be applying the rules correctly, but the recommendation from the Local Government Association is that all funds review the wording of their funding strategy statements. So we will be doing that going forward, and I'll be talking to Hymans about this to see if we've got correct wording in there. Thank you very much.
Good. Thanks very much. Hymans, do you want to add anything? Richard or? Okay. Right, and now we'll go through comments. Trying to think, I assume everybody's read this report. Bill, have you got any comments on it?
Yes, I mean, it's changed, but not, there aren't dramatic changes from the previous one that I could see. I'm perfectly happy with it as a report, and really have no further comment, but we do need to obviously regularly look at it. Thank you.
Good. Jill, any comments?
Thank you. Just curious, how often does this happen, that this needs to be considered, and why did they need to change it?
Waiting for the microphone to make its way across.
Thank you. The funding strategy statement is a key document for valuations, so a minimum of 3 years. But we, like all of our policies, we can keep them under annual review. But also, as I say, if there's any changes to legislation that have an impact on the FSS, we will update at that time as well.
So this was an instance where the regulation changed and therefore we needed to update our policy to keep it in line with current regulations.
Okay, thanks. So if I could just kind of come back on that, how often does an employer leave that we need to look at this deferred debt arrangement or credit?
There are set requirements when an employer can leave. So, for example, if there was a contractor, that would be at the end of that contract. If community admission bodies, which we don't have many of those now, and that would be, let's say, charitable organisations, if they cease to have any members in the pension scheme, that would be another trigger for leaving the pension scheme.
Okay, thank you.
Okay. Councillor Kettle, any comments? Councillor Miller? No. Okay, so we've noted and commented. Anything else? No? Good. Right, we now have to move into exempt and confidential information. So I think what we'll do is, can I have somebody to propose and second the resolution? And then we'll have a few minutes break while we wander. So I sat in those chairs on Friday and I know how you're feeling. So this is a really nice comfy chair. So I suggest we do have a break while the videoing disappears. So do I have somebody to propose confidential? Thank you, Bill Gifford. Seconding? Yeah, Jill's been Vince, right. So we've proposed and seconded that members of the public be excluded from the meeting for the items mentioned below on the grounds that their presence will involve disclosure of exempt information as defined in paragraph 3 of Schedule 12A of Part 1 of the Local Government Act 1972. Thank you. Right. Can we stop recording, please?